Market sidesteps the negative trading day in Asia and Europe in the final 48 hours of 2016 trading. And Ghana posts 4% GDP growth in the third quarter of the outgoing year despite the fall in commodity prices. Plus, the U.S. Securities and Exchange Commission is investigating the sale of 850 million bonds issued by Mozambique. Now let's get started. A bittersweet Thursday for markets around the world. Here on the continent, some of the largest bourses were in the green as at midday Nigerian time. And check that, those are the data that you have now on your TV screen. The Nigerian stock market are heading back towards 26,800, 26,760 at lunchtime, about 0.27% in the green. Around midday Nigerian time, the South African GSE, the largest market on the continent, was heading towards 50,600. About 0.32%, an aggressive trading day across all the indices on the South African market. In Egypt, the largest market north of the continent, 12,382.66 reading on the Egyptian Stock Exchange Index around 12 o'clock Nigerian time in the afternoon. That's 1%. Three of the major bourses on the continent, the Kenyan market we're tracking, but that's the 0.33% negative close for the Kenyan market on Wednesday. Now, we have a mixed trading day in the Middle East this Thursday. Negative sentiments dragging the Saudi Arabian shares lower, but other main exchanges were in the green about an hour and a half ago when we tracked them from our news desk here in Lagos. And look at the Abu Dhabi market, really hot, 1.67%, as well as the Qatar Stock Exchange, tracking that at 1.22%, 10,000. Almost heading 10,500, 10,467. The Dubai financial markets, 3,531, also in the green by 0.32%. And the Saudi market, you heard earlier, 7,247, sluggish, 0.63%. The markets in Europe started Thursday lower despite the inflows of some economic data. Overnight, the U.S. housing survey disappoints while the Dow failed to grab the psychological 20,000 mark. But let's talk to Ulrich Barths, the Frankfurt Stock Exchange, DWTV financial correspondent for Channels Television. Good afternoon, Ulrich, and thanks for coming through today. Now, let's look at the markets in your region in sympathy, as it were, with the Asian markets. No thanks to the sluggish U.S. housing market. The U.S. rig count, the drags crude prices lower today, and the Dow failing to grab the 20,000 mark. That's quite a lot to consider. So what's left of the 2016 final trading days?
Yeah, the market is trading in a very, very sluggish way. When you walk through the room here, the Frankfurt trading floor, it's much quieter than usual. Usually the board clatters and clicks every couple of seconds. That's a little bit slower now, so trading really has gone down. People are on vacation, and those people that are here, if they do something at the moment, they're more inclined to take profits than to risk new investment before the start of the new year. And they have reason to be relatively happy. Being quiet, being sluggish does not mean that people are unhappy or basically insecure. There's a feeling that the market will slowly edge up in 2017. But that they want to lock in those profits that they made this year.
Yeah, well, Ulrich, looks like you and I are the ones left on the trading floors everywhere. It looks like the traders are gone, but we have to remain in business, covering the market when there's no one else on the floor, as long as the trading engine still is in session. So, but very interesting story. Let's look at Toshiba. It looks like the Japanese multi-billion-dollar conglomerate is like a sinking Titanic at the moment. Multi-billion dollars are at stake here. What in Europe are traders and investors really concerned about Toshiba's dilemma?
Yeah, the concern is huge. I mean, when you look at Toshiba, that concern translates to about 40% share price loss in this week since the news of the necessity of a major write-down at a U.S. subsidiary has become public. The U.S. subsidiary does nuclear construction and services, and it's called Chicago Bridge and Iron. Toshiba's U.S. subsidiary Westinghouse took that over. Now there's a dispute over what kind of losses are to be expected at this unit, but it is clear that it will affect Toshiba massively. probably with billions in write-downs, and that will also affect the end result. And this comes as shocking news. No one saw this coming, and the problem is there's no end figure at the moment for people to calculate on, and I think that increases the nervousness. And increasing the nervousness is also the thumbs down by a rating agency, Standard & Poor's, taking down the creditworthiness by a notch to B- and warning, hey, it might be even a further downgrade in store.
Yes, but let's finish off, Ulrich, back in the U.S., where the U.S. President-elect Donald Trump has been tweeting in the last couple of days, beating his chest and saying, look, I'm responsible. Look at the price of oil. Look at the stock market. I'm the guy who's making all of you smile towards the end of 2016. Hold on a second, Ulrich. But look at the Dow with all the Donald Trump's, well, clearly taking credit for the market. Looks like the Dow decides not to grab the 20,000 level before the new year. So do you think the market has really, is the market done and over with Donald Trump rally, as it were?
It seems as if the rally has stopped at the moment, whether it's an interruption or an end. I don't really know. I don't think anybody knows. I think there's still a fair bit of optimism in the market over what Donald Trump will do as president when he assumes office on January 20th. But nobody really knows that. But they know his economic plan is there, lowering taxes, being much more free with banks, regulations, and also investing, of course, a huge amount of money into infrastructure and all sorts of industries that need supporting in his view. And people still view that positively. But remember, you know, even if the Trumphoria, if you will, if the Trump rally has been interrupted now, it still carried the market a long way, and the Dow all the way up to almost 20,000 points. So that is something I don't think anybody was looking at the beginning of the year or even before the U.S. election, I think.
Well, so if the markets start going down, perhaps we expect Donald Trump, President-elect, to have some tweet and say, you know what, it wasn't me. Don't blame me for this, guys. If it's good, I take the credit. If it's not good, well, you folks on Wall Street and Frankfurt, Lagos, go sort yourself out. Thank you, Ulrich. Enjoy your lunch. Prepare for the new year. Tomorrow is the final trading day. We hope to see you then. Okay, let's